Hi, Christopher Montalbano here, Principal at Pilgrim Title Insurance Company here in East Providence, Rhode Island, and we're up for another installment of TOD Talks Title. And we're a little bit off of title, but in a very important topic for commercial investors of real estate when they're doing their closings. That is 1031 exchanges, and I'm here with Patty Flowers from IPX 1031 Exchange, who came down to talk a little TOD Talks Title and 1031 exchanges with us.
Thanks for having me.
Thank you for coming.
It.
So first off, why don't you tell us basically what a 1031 is?
Sure. Well, a 1031 tax deferred exchange, 1031 comes from a section of the IRS tax code, and it says that investment property owners who are selling their property would normally have to pay about 25-30% or more in capital gains tax.
Capital gains tax, sure.
So with the 1031 exchange program, they're actually allowed to defer those taxes if they follow all the rules in a 1031, use a qualified intermediary like IPX, and go on and buy other investment property. That 25 or 30% in taxes that they normally would have paid and would have been gone forever to the government. Instead, they get to keep that money working for them. It's equity that they can roll into new investment property.
So what type of property qualifies for a 1031 exchange? Is it just real estate, or is it stocks, bonds? What qualifies to do a 1031 exchange?
Yeah. Well, up until the last Tax Reform Act, you could actually also do personal property, furniture and fixtures, equipment, franchise rights, but that's no longer under the new tax reform bill. So it's strictly investment property, but it can be...
By property, you mean real estate?
Investment real estate, yeah. It can be anything from condominium rental or single-family rental, up through a multifamily, commercial building, raw land, industrial. Everything counts as long as it's investment or business use.
Now, the principle here is you would exchange that one investment property that you've got the gain on and roll that money into another investment property. Do I have to, if I'm, say, to use your example, I have an apartment building that I've got a big gain on and I'm selling that, do I have to roll it into another apartment building, or could I do a different type of investment real estate, for example, a warehouse or an office building?
Yeah, the term like-kind exchange is pretty misleading. So actually, 1031 exchanges for investment property is very flexible. So you could sell a multifamily, you could buy commercial, you could sell retail, buy an apartment building, and you can actually mix and match and sell 2 or 3 and buy 2 or 3.
Well, that's interesting.
Yeah, as long as it's investment, any type of property qualifies.
So, for example, if I had one big gain, I could break that up if I wanted to buy 4 smaller items, if that's where I wanted my investment dollars to go.
Absolutely, yeah. Sometimes people are trying to consolidate and they want to sell 2 or 3 to buy one bigger one, and sometimes they want to diversify and sell one larger one and buy 2 or 3 smaller ones.
Now, you mentioned that this comes out of the IRS code, which is very technical, and it is inflexible in terms of guidelines.
It sure is.
Can you give us some of the basic date guidelines that investors would have to meet in order to take advantage of a 1031 exchange?
Sure. So usually in the first conversation, you want the investors to know that when they're selling property, the clock starts on the day of the sale closing.
The closing.
Not when they sign the P&S agreement,
Okay.
but the closing date when the benefits and burdens are transferred, the deed is transferred.
Gotcha.
That starts the clock. You have 45 calendar days to identify to us as the intermediary in writing what property or properties you plan to purchase. You actually have a six months in total, 180 days to purchase, but that 45 days to identify is the timeline that's tricky.
Now, does the 180 days, I have 45 days from I sell my property today, I have 45 days to tell the qualified intermediary I'm going to buy this other property or these other properties. Does the 180 days start ticking from the 45 day or the identification, or from the closing when I sell my original property?
The full 180-day cycle starts from day 0, which is the sale closing date.
Gotcha.
So it's really 45 days plus 135 for a total of 180.
So that 45 is eating into the total 180
Yes.
day period. Now, you said qualified intermediary. Can you explain to us what that is?
Sure. So in the 1031 tax code, the IRS says you need a neutral third party to facilitate the exchange, which means to set it up. It's this type of an escrow account. A little bit different in structure, but the same. Money's held in a bank in between the sale and the purchase. And the IRS says the taxpayer, the seller, or anyone related to them or doing business with them cannot control the money or touch the money in between the sale and the purchase. So you need this neutral third party, and they call it a qualified intermediary. So in the end, we actually structure the exchange, and a lot of what some of us do is more as upfront as guidance and helping people pre-structure so they can plan ahead.
Gotcha. Now, and you say it has to be a totally neutral third party. It can't be the seller's lawyer, for example, or it has to be somebody, a third party such as yourself, who's got no other connection to the seller of the real estate other than serving in this capacity. Is that correct?
That's true, yeah. The IRS refers to related parties in that scenario as anyone who's done business with or working as a fiduciary for that client in at least the last 2 years. So that would mean their attorney, even if it was their estate attorney or something outside of real estate, cannot be their intermediary. Their accountant, their broker, their financial advisor cannot be their intermediary.
Very interesting. Well, we're here with Patty Flowers from IPX 1031 Exchange, talking a little bit about the basics of tax-free exchanges under the Section 1031 of the IRS Code. And thank you for joining us for this TOD Talks title. Thank you, Patty, for joining us.
Thank you so much for having me. Thank you.